Hello guys, welcome to Index Trader channel. Today we are going to see about expiry trading analysis for tomorrow's expiry 10 September. So this is a continuation video of last Sunday. So last Sunday we saw that Nifty will be trading in the range of 11,500 to 11,000 with a good support level at near about 11,200 to 300. So Nifty took support in this range and was trading between this 11,400 to 11,200. Even after a big fall today, big gap down opening, Nifty took support in 11,200. So now whether Nifty will resume upside or it will be in range. So what will be the trading positions for tomorrow? So what will be the trading range? So watch till the ends for the entire trading range and the exact trading support and resistance points, etc. So let's move on to the analysis now. So first thing, we will move on to the EMA setup. So in the EMA setup we can see that Nifty was consolidating. So that is what we are discussed last Sunday. So Nifty was in a consolidation and it will consolidate near in the EMA 20. So once it breaks EMA 20, then it can go till EMA 40. So that is what we had discussed last Sunday, and we saw that Nifty was trading in that range only. It tried to go about 11,400, but it could not sustain that level. So EMA 20 was acting as a strong resistance. That's what we can see, that you can see Nifty resistance was at EMA 20 and now it took support near EMA 40. So this is EMA 40. So in final, what we can say that Nifty was consolidating in this range. So after its consolidation, it should either break this EMA 40 to move on to the next level, that is EMA 200. So now we go through the other setup also. This is the Fibonacci setup. So Fibonacci, we see that we saw last Friday that 78.6% is a strong resistance and it could not cross that level. So even it tried twice on Tuesday as well as Monday as well as Tuesday, but it could not sustain and close above that. You can see that exactly it was the body was here and there was a wick formed here, and Nifty closed below this 78.6% retracement. That's what we can see. There was not a single closing about in this area. So that confirms that Nifty has a strong resistance at this point, that is around 11,378. 11,378 is acting as a strong resistance for Nifty right now. So anything, any closing above this only, we can say that Nifty can resume upside. Till that time, it will try to hit here or it can resume downside from here. But as of now, we can say that Fibonacci level is acting as a strong resistance and it is completely bearish. Now we move on to the next setup, that is the price action here. So in the price action weekly setup also, you can see that Nifty was testing the weekly support here near about 11,180 level. Even it went near 1,185 today, but there was a support zone built up here. There is a weekly support here. So we cannot conclude that another 2 days we have, so we cannot conclude at this position, but you can see that even the 11,390 level is acting as a resistance and the candle was in red. So now we move on to the price action daily chart. So in the daily chart, you can see that RSI was still below this 50 line, which is a bearish setup, and you can see that Nifty could not cross this wedge formed, and even it tried to go near that, but there is a gap here, but still Nifty was not in a position to go above this level. So price action also, it is still in bearish one. Even after a green candle formed here, you can see the Heikin setup. In the Heikin setup also, you can see that still it is in red. So there is not a continuous, even though the candle is looking green, but here the overall setup is still bearish. That is not still it is not in a position for bullish movement here. So that confirms the EMA setup now. So now we move on to the other day. So in cash we can see that FIIs were net sellers, and they were heavily selling in cash, and that is strong bearish, and you can see that continuously they are selling, and DIIs also were turning bearish, and they are also continuously selling. Even today both of them were net sellers. So that confirms that they are not in a position to buy at this level. Even FIIs are hesitant to buy in this throughout this month. So what it implies is FIIs are not in a position to buy on cash. So now we move on to the other data, that is the derivative data. So in the derivative data we can clearly see that FIIs turned completely bearish today. You can see that they had closed almost half of their future long positions here, which is a strong negative here, and also you can see the call positions also, they are closing, so which is a downside. This is a downside, and you can see a huge amount of puts being added here, so this is something negative here. So this is completely a bearish setup, we can say. You can see FII is having a huge put positions. You can see this is the put positions. Even before you can never see such kind of put positions being added. So this shows that they are not sure market is going to going to upside. So they are taking a hedge as taking put positions. So that is the reason market is not in a position to go upside. It is continuously in range and in consolidation, more in a bearish phase, because there it is, market is still in sell on rise mode, and you can see that futures are getting closed. So that confirms that FIIs are solidly turning bearish. So slowly they are offloading all their future positions. So now we look at the client positions here. So client positions, retailers, so retailers are evergreen bullish, and they are taking positive positions here. You can see that they are taking fresh longs, and they are taking huge, you can see there is a huge build-up of call longs here. So they are adding call longs as well as futures. So they are ultra bullish, we can say that they are bullish. So market behaves bearish, but they are turning into bullish. Now we move on to the proprietary traders. Proprietary traders go with FIIs, and you can see that tomorrow, for tomorrow's trading, they are totally turned into bearish, we can say. Why? Because there is a huge call shots they had taken. So that suggests that the market will be a range bound, and they have written strong call writing. So that is the reason call positions were high, call writing were done huge positions, and put they had written in small numbers. So put writing was very less compared to the call writing. So that confirms that they are also bearish. So in short, we can say that FIIs and pros turned bearish, and clients were bullish. So what will be the range we will go through in option chain data finally. So what will be the range for tomorrow? So we can see that 11,200 today was a good support being built up here. So this is a support here today, and you can see that put writing was done today. So that shows that this will be a strong base for tomorrow session, and strong put call writing was done at 11,400. You can see 11,400 there was a call writing. Even at 11,300 there was a huge call writing here today. Only the last moment there was a short covering happened, but at overall you can see that 11,300 is a strong resistance. So 11,400 the next resistance. So we can say that from 11,500, 400 and near about 11,300 there was a call writing here. So call writing is at this position. So that is the reason you can see that call side there was a huge decay happened. So the decay is more on calls, whereas the decay is less on put side. So that means smart money is at call side. They are writing calls, they are buying puts. So they are buying puts and they are writing calls. So that is the reason it was totally bearish. So what will be the range for tomorrow is maximum 11,400 to 11,200 will be the range, but there is a strong resistance at 11,300 level. So the opening is what very important, because today's closing is at 11,278. so any closing above this 11,300, so there will be a huge call put writing will be there at 11,300. So taking index somewhat upward towards 11,350 or to the Fibonacci level 380. So that is 350 to 380 is a strong resistance zone. So this area will be acting as a strong resistance for tomorrow, and support zone is only at 11,000. Today's support zone was around 11,240 to 50. So this will be the support zone for today. Even for tomorrow also it will act, but this will be the resistance zone. So now we move on to the final intraday setup. So in this intraday support you can see that this resistance turned into support zone, acted as a support today also. Even it went below that, but 11,187 act as a strong support, and this zone acted as a strong support today. This will be the strong resistance zone for tomorrow, that is 300 to 350 range will be a strong resistance zone. Even if it is going above this 350 will be a strong resistance zone. So this is the zone of resistance for tomorrow. So any opening here or moving towards this will get rejected, and there will be a strong selling will be initiated. But if it is opening near about this below this 300, then you can say that 300 will be acting as a strong resistance. So there is a possibility that it can go downside towards it, but any opening above this will move towards this 11,350 range. So either this will be the movement and closing will be near about 11,300, or there is another possibility that opening near about 11,300 will take this to somewhat here and closing below this 11,300 to 350 range. So 350 to 300 will be the most closing range for tomorrow, but the trading range for tomorrow will be around 11,200 to maximum 11,400. So this will be the trading range for tomorrow. Since that smart money is totally bearish, any opening high will be taken for selling, so accordingly you can take trade. So hope this video will be useful to you. Thanks for watching. Hit like button and subscribe to our channel. Share it with your friends. Thank you very much. Thank you.